Bitcoin ETF.
First spot Bitcoin ETF.
Stating that Bitcoin ETF.
Crypto are betting big money and
Next generation internet.
No, it won't be an ETF.
So what is an ETF? An ETF, or exchange traded fund, is a type of investment that combines elements of both stocks and mutual funds, but with some unique features of its own. Let's think of it like this. Imagine like ETF is like just a basket that contains a variety of investment. These can be stocks, bonds, commodities, or any mix or different types of such assets. The basket is meant to trace and track the performance of specific index, sector, commodity, or any other type of assets.
Okay, that was good.
One of the key advantages of ETFs is diversification. Since they hold a collection of different assets, they spread out your risk. For instance, ETF that tracks an index, like something like S&P 500, gives you a small piece of each company in that index. Isn't that cool?
This is so cool!
Now let's talk about the most interesting part here. Bitcoin ETF.
Oh shit.
What is Bitcoin ETF? A Bitcoin ETF would be a fund that includes Bitcoin or any Bitcoin related assets. By buying shares of Bitcoin ETF, you're effectively investing in Bitcoin without getting the real exposure like buying, storing, or managing the actual crypto. Having said that, this provides a more straightforward way for investors to gain exposure to the crypto itself, like Bitcoin, while leveraging the benefits of an ETF, like trading, flexibility, diversification, assuming that this Bitcoin consists of other ETFs. But wait a second, it was never that smooth when it comes to Bitcoin ETF. July 1st, 2013, Cameron and Tyler Winklevoss,
You guys related?
It's good, funny, we never heard that before.
filed to launch the Winklevoss Bitcoin Trust, marking the first significant attempt to create a Bitcoin ETF. Bitcoin around that time was around $100.
This idea is potentially worth millions of dollars.
Millions?
Yes.
You might just be letting your imaginations run away with you.
Fast forward 2017, the SEC denies the Winklevoss attempt, citing concern for fraudulent activities. So we have a period of time from 2016 to 2020 where Grayscale, Bitwise, Van Eck, among many other US institutions, where they filed for Bitcoin ETF but either withdrew the applications or got rejected.
You're being extremely negative, Craig.
On April 17, 2021, Gary Gensler took over the SEC office. And since then, he has filed 55 enforcement lawsuits over crypto firms. Firms like Coinbase, Binance, and Kraken. However, fast forward, in 2023, a completely new wave fueled by ARK Invest and 21 Shares to initiate their own Bitcoin ETFs, where also, to make it better, BlackRock joined to fuel this momentum. To make things better, Grayscale's investment won a significant battle against the SEC regarding its application to turn Grayscale Bitcoin Trust into Bitcoin ETF. Because historically, if you remember, SEC rejected their application to convert this fund, but then the courts appeal into deeming SEC's action as arbitrary. If you think about it, this is not just a major one for Grayscale investment. This was the stepping stone to make the Bitcoin ETF approved. So the Bitcoin ETF got approved. Now what? Actually, 11 funds have listed the Bitcoin ETF. The two major ones is Grayscale Bitcoin ETF Fund, which is the major one. It has $20 billion in assets under management. And the second largest one is BlackRock's iShares Fund, which has around, recently based on the news, $2 billion in assets under management. This is a very good step for Bitcoin ETF, to be honest. So given you already discussed the what and how. Now it's really important to understand why Bitcoin ETF is important. The only way I can think about why Bitcoin ETF is a major stepping stone into such a market is first by discussing retail investors. So by having the average Joe able to invest into Bitcoin, this provides trust into the market, because let's admit it, Web3 user experience is broken. And having companies like major institutions to offer Bitcoin that provides a really good user experience, which is Web2 based, is amazing to the Web3 market. Second, institutional investors. Imagine it like this. Imagine having BlackRock, Fidelity of the world, investing in Bitcoin. This provides major trust to investors to put their money into Bitcoin, which provides in the long term more easy access to crypto itself. Third, which is the most important one, regulation. Having more regulatory ecosystem will provide more transparency and more trust into the market itself, which will ease investing for major institutions and enhance the market itself. Now, let's face it, it's not all flowery. Bitcoin ETF, specifically the intervention of major institutions into Web3 world, is not all good. I have three main reasons for my concern. First one is easy access, which leads to higher price volatility. Of course, retail investors have access to Web3 exchanges, but like with institutions and traditional finance getting into Bitcoin, so it has more coverage of retail investors who can easily buy, sell, or even hold the Bitcoin ETF itself, which lead in the future to higher price volatility. Second, price manipulation. Imagine it like this. Having major institution, they have very major desks trading Bitcoin ETF, which can lead to very easy price manipulation, which is not very good for the Bitcoin itself. And finally, shorting. The potential of shorting is really risky for the Bitcoin itself, because in bear markets can really increase the pressure of the downward sloping price of the Bitcoin itself. Of course, we already have shorting on Web3 exchanges, but like as I mentioned in the first point, having this open for the average Joe investor is risky for the underlying asset itself. Don't consider this video as financial advice. It's an informative, educational video to shed the light on a completely new markets. Please don't forget to subscribe, share, and like, and comment below for what's next or ideas to discuss.